that the primary reason they want to know all this?
Yes, it's a form of risk assessment. So credit card loans aren't secured like a mortgage or a car loan. So they want to make sure that their customers continue to have an ability to pay.
So in some cases, banks are making repeated requests for salary information as opposed to maybe once a year. Why the urgency?
So what we're seeing here is there's a thing called secured versus unsecured loans. The secured loan means that there's something that they can grab if you don't pay your bill. So a secured loan with, let's say, like a mortgage or a house, if you don't pay your credit card bill, they can grab your house, but credit cards are not secured. But if they have a loan, if you have a loan out and they can repo your car, they can, like I said, take your home. There's some type of what they call a collateral, something that they can leverage and sell to pay off your debt if you don't pay it. So credit cards don't have that, and that's why they want to know your income.
To look back on the last few years, especially what's happened in the job market, right? We had the great resignation. People were switching jobs at a record pace or quitting, moving into the gig economy. And then we started to see headlines about layoffs, right? The likelihood that a bank customer has switched jobs and had their income situation change over the last few years is much higher today than it has been. And the banks have really ramped up efforts to try to get this information. So emails and letters sent out to customers requesting new income information is up 500% over the last 3 years.
All right, so raising credit limits is one thing, engaging someone's ability to pay their bills is one thing. But how badly do the banks want to know this information? Is there any incentive in this for the bank customer?
So it depends on the bank. Some banks are being particularly generous and saying, hey, we'll even reward you with credit card points if you tell us your most recent income information. And that can be very, very valuable, especially people who are a fan of travel cards or booking flights on miles, as those people know very well. But the other potential upside to keeping your income information up to date, particularly if it's gone up, is that you could qualify for maybe an upgraded credit card or a home equity line of credit or some other kind of loan product.
That's what I love. I love the idea of leveraging your assets for your benefit. Now, working so much in the banking industry for so long, I understand why they're doing this, and this is the dark side. This is the dark side of any card point holdings or discount programs, whatever, membership programs or whatever it may be. These points, these rewards that people are getting, the cash back, all that kind of thing, that is for the wealthy. And what I mean by wealthy, I mean those who manage their money well, those who have a positive net worth, or those who are not highly in debt. Those point systems are for them, to reward them with travel points, to keep them to keep spending with companies, to keep bringing their dollars to this bank. Okay. They are saying, we're going to give you 1,000 points or $100 or 5% cash back. Then they're using that to incentivize people to put their money in that they know can't pay. So they hit them with the interest rate charges, the late fees, all that. All those fees help pay for your points. That's what helps their balance sheet. Because if they can entice you to use your credit card, pay it off every month, you're not paying any interest charges. You're fine. You're going to just pay what you owe, and you're going to go on about your merry way. But then some people see, oh, they're giving rewards. Let me get that. And then they got the late fees. They have all the problems. And those are what's going to help pay or basically balance that sheet for those who are using the reward system and using it in a positive way. So it's not like the credit card companies are just these great companies. They're playing both sides of the fence. They're satisfying their customers that are bringing in the income, the money, the salary information, right? And bringing their direct deposits over so they can gather more assets. There's a whole nother conversation there. And they're using that to loan out to people who are going to be in debt and going to pay those interest charges and things of that nature. So it's a whole ecosystem of finances.